What's up, Banter fam? I hope you're having a lovely day. I am back again to give you guys the best DeFi and yield farming strategies to help you profit in this crazy market. What a weekend we've had. We've had some crazy price swings, Bitcoin pumping, Bitcoin dumping, and now it seems to be on the rise again. It's been a crazy weekend, so I'm going to keep you guys updated with the exact strategies that I am using to counter this market volatility and manage to profit during a downtrend, because the best part about yield farming is it enables us to profit when the markets are declining. So I'm going to show you two amazing strategies to do that today. I'm live every day at 1:30 to give you guys the best alpha. Let's get straight into the show. Get up, let's go. Welcome back, Banter fam. What a crazy weekend that we just had. We've seen Bitcoin completely dump in price from 44K back down to 38K. It's been a lot of volatility in this market, and that is why today's episode is so important, because I'm going to show you guys the exact strategies that I use to combat market volatility. We have to be putting our assets to work in this market to be able to profit during a downtrend, and I'm going to show you exactly how to do that using Luna and using Solana in today's episode. It's going to be a crazy one, but before I get into those strategies, we have to address this market because it has been a crazy, turbulent weekend. We've seen the Bitcoin price drop all the way from almost 45,000 back down 16% to 38K. We are actually recovering at the moment. If we zoom in a little bit here, we have pushed back up about $1,000 back into the 39K region on the news that Biden and Putin may be meeting to discuss terms. So it's a really volatile market at the moment, which is being driven by this Russian news, driven by this CPI data and the potential looming rate hike. So we've had some volatility in the macro sense, but that is what makes these strategies today even more important, because when the market is declining, we need to find ways to be able to continue to profit, and that is exactly what I will be running through today. The Bitcoin dominance has actually held up pretty well, or it's actually collapsed a little bit from its peak, which means that altcoins are showing a little bit of strength here. So I actually don't mind sitting at in alts at the moment. I'm not panicking. I'm not touching my bags. I'm not selling, guys. You just have to be patient during these times. I know it's a scary market. Myself took a little bit of a hit over this weekend, but I'm doing my best to just remain calm and keep implementing these strategies that can continue to generate yield and generate profit even when the markets are dropping, because that is what we have to do. We have to continue to dollar cost average if you have long-term conviction, and think of these dips as buying opportunities. It doesn't come very often that we get these massive dips, and these dips are a big chance to accumulate in this market. They aren't this big scary thing to be afraid of. They're actually a thing that can give us massive opportunities in this market. So that is my mindset when it comes to dips. And the alts have actually held up fairly well so far. Obviously, there is still a lot to play out on the macro scheme of things with the Russian news. So we are on a bit of a knife's edge at the moment. So we have to be careful with how we play this market right now. But if you're in the quality projects and you've been positioning yourselves in the right projects and farming in the right places, like I'll show you today, you guys can put yourself ahead of the pack and make sure that you can weather this crazy storm that we're seeing. But yeah, the alts have held up pretty well, which I'm happy with. And Alex Becker actually put out an interesting theory today, which I think kind of aligns in a way with my views. He said, it's funny that the market is at max fear when we are at 38K Bitcoin, $2,700 ETH. ETH was 100 not too long ago. Crypto has come a long way. He said, to be blunt, the current prices, in my eyes, with rates in March, war narrative, etc. are great. The macro environment of crypto is still better than it's ever been in history. And I would kind of agree with this to an extent. Obviously, we've got these huge macro issues. However, at the same time, the fundamentals are stronger than ever. If you look across crypto, what's happening with the mass adoption right now, coming into the crypto market, institutions getting involved with the metaverse, there is so much happening. Bitcoin becoming legal tender in multiple states potentially. There is so much happening on the macro landscape to make me positive, but at the same time, we are getting these events which are also bearish for crypto. But that spells opportunity in my eyes, because when you've got really strong fundamentals capped with market uncertainty, those are the times you want to be capitalizing. I'm not saying to ape into this dip now. We can come a lot lower, and that's just the reality of crypto. There's no safe way to play this market when it comes to buying, because there's always potential downside. But I look at crypto as a risk reward play, because the upside is unlimited and the downside is limited. So it's an asymmetrical bet to be in the good projects in this market. Alex said, I was extremely bearish in the May dip because nothing mainstream was happening. There was no macro trend, no countries, no big investors. This just isn't the case right now. Reminds me of the COVID crash where price had nothing to do with the macro reality. And yeah, I would say that has some truth to it. Obviously, this doesn't mean go out and buy right now, but what it does mean is that we are sitting in a good place when it comes to the macro landscape of crypto adoption, and that is really positive. And on the show later today, on Round Show, he'll be running through some of the fundamentals when it comes to that, but we can't be sitting here and being complacent. We have to take action in this market to be able to come out the other side even stronger and even better. Right now is not the time to be panicking and going, oh, my bags could be dropping another 30, 40, 50%. Like, we have to take action, and we have to implement strategies that can help us profit in this market. And there is no better way to do that than yield farming. Yield farming is really the golden key to accumulation at these levels, because if you don't have spare cash to buy dips, and I know a lot of us probably run ourselves dry when we're buying all these dips, what yield farming actually enables us to do is continuously average into the projects that we want to be in through the market without having to put in fresh capital. Because let's, for example, say you're staking Solana for 20% a year. What you're doing is every time you're compounding rewards back into Solana, you're actually re-compounding that SOL back into more SOL to accumulate over time. You're not putting any fresh capital into Solana in this case, but what you are doing is continuously being able to stack your Solana stack. So then when the market does pump, you're actually profiting twofold. So that is the real power of yield farming. You're able to profit even if the market's down. And I will be showing you two strategies for Luna and Solana today, how to profit in the market. And then on tomorrow's show, I'll be running through stablecoins. So I'm really going to be running you guys through this week the exact strategies that I'm implementing, because what a better week than to start thinking about these strategies, because the market's come down, there's a bit of uncertainty. Now's the time to be positioning yourself in the good farms, in the good quality projects that are able to generate you yield to combat this market. And I said this, which backs up that point as well. Don't have cash to buy dips. What if there was a way to consistently DCA and accumulate tokens? Oh wait, there is. Farming, master the art of yield farming, and you'll never have to worry about a dip again. And this is true. I'm sitting comfy in my bags at the moment because I know that even if the market's dropping, I'm actually accumulating at lower levels. I have long-term crypto conviction that in 2, 3, 4+ years, the crypto market will be significantly higher than it is today. So if you're in the quality projects and you're accumulating at lower levels, you're going to be in a much better position come a couple years' time than you are now. So the market dropping is actually a blessing in disguise. I'm not complaining at all that we're getting dips. I'm actually pretty happy in a way. Of course, it's annoying and it sucks to lose money in the short-term sense, but I'm happy in the long-term sense that I'm able to accumulate at lower levels, and you guys should be doing the exact same thing. So let's get straight into these strategies now. Without further ado, I'll be showing you the two strategies that I'm using to profit in this market and combat volatility. And these aren't crazy strategies either. These are fairly safe strategies, in my opinion, ones with minimal risk compared to other strategies. And that's why the APRs will be around 20 to 25% in this video, but they are safer APRs. Now is not the time to be giving you crazy 1,000 APR strategies. That's just not how we want to play this market. We want to be a little more conservative, but we still want to keep the ball rolling when it comes to being able to generate yield. Before I get into it, smash the like button on this video to show the love. Smash the like button for these strategies. I want to see that the likes absolutely explode. What is better than generating yield in a downtrend? It is really the perfect scenario if you are a yield farmer. Now, Anchor Protocol is where I have to start, because Anchor has had some real changes in the past that have made it one of the most premier places to be able to earn yield on your stables and earn yield on your Luna. So if you have Luna in your wallet, what is the point? And I can say the same for a few assets, but Luna and Solana and Phantom, especially these major assets, why just hold them in your wallet and have them gathering dust on a Binance account when you can actually come in and stake them and earn yield on them? So I don't see the point in keeping, for example, my Luna sitting gathering dust in Binance when I can put it into Anchor and I can actually capitalize to earn yield. So the first strategy I'll be running through is Luna farming and UST farming on Anchor Protocol. And then I'll show you after that a strategy that I use to eliminate the risk of liquidation for the people that aren't comfortable staking their Luna on Anchor. So there's something for everyone in this video, and we have to cover Luna first because it's one of the assets I'm most bullish on, and I know a lot of you guys own Luna too. So let's get straight into it. The first strategy I want to show you is how to utilize the borrow component of Anchor Protocol to be able to not only earn yield on your Luna, but also earn yield on UST, which you receive for borrowing. So I'll run you through now, step by step, how to use Anchor Protocol to stake your Luna and start earning yield. And you can earn 22% yield at the moment on this strategy. So if we go onto the borrow tab, and you'll see I have some funds in here that I was playing around with before on Anchor, we will see that the net APR is 2.38% now. So Anchor, now that it's had its refill, is actually starting to incentivize borrowing again on Anchor Protocol. So you're actually getting paid to borrow UST against your Luna at the moment. This APR was negative for quite a while, but at the moment, it's actually more profitable to stake your Luna and borrow it and borrow UST than it was in the past, and you're actually getting paid to do so, which is really positive. So how do you put up your Luna in Anchor Protocol to borrow UST, and then how can you use that UST to earn yield? That is what I'll be running through right now. So what you can do is you can go into the B asset tab of Anchor Protocol, and we see Luna, bLuna. So if you click on that tab, you can actually bond your Luna for bLuna. bLuna means bonded Luna. It is pegged to the price of Luna, so you don't need to worry about fluctuations there. It's usually pretty much the exact same price as Luna, 0.99 now. So what you can do is take your Luna. You'll need a TerraStation wallet. There's a TerraStation mobile application and a TerraStation Google extension that I would recommend. So I'm going to assume you guys have that set up because I've done previous videos on that, but you'll need a TerraStation wallet with Luna in your wallet to be able to execute this strategy. So once you've got your TerraStation wallet set up, and I use the phone app, it's really simple with the QR codes, you can bond your Luna. So you can take your Luna from the centralized exchange or your MetaMask where you're holding it, and you can send that to your TerraStation wallet, and you can bond your Luna for bLuna. Now, what bonding Luna for bLuna allows you to do is come into the borrow tab, and you can stake your Luna. So you can provide your Luna as collateral to be able to borrow UST. So you click on provide, and you now can deposit the amount of Luna that you wish to provide to borrow UST. Now, this strategy wasn't as profitable a few weeks ago, and that's why I didn't really talk about it that much in this video. But now that Anchor Protocol has been replenished, as we saw here, Do Kwon put another, I think, 450 million UST into Anchor. The strategy is actually now fairly profitable again, and that's why I'm talking about it right now, because I think it is one of the best opportunities for staking your Luna in crypto. So what you can do is, as I said, put your bLuna in, use that to borrow UST. So if you put in 1 Luna, you can borrow a certain amount of UST. That's not correct, but you can set a borrow limit depending on the amount of Luna that you want to put in. So what you now can do is, if you provide collateral, you can click borrow up here. So the first step is providing collateral in terms of bLuna, and the second step is being able to use that Luna as collateral to borrow UST. Why are we borrowing UST? Because on the earn tab, you can earn 19.36% on your UST. So you're getting paid 2.3% to borrow UST, and then you're getting paid another 20% to stake that UST. So you're effectively earning almost 22% to be able to stake your Luna. So that's a pretty good deal in my opinion. Obviously, there is a liquidation risk, but I'll run through that right now. So once you've provided your bLuna, you can provide any amount you want. You can borrow against it using the desired amount you want to borrow. Now, there is an LTV on here, so you won't be able to borrow up to 100%. Obviously, without being liquidated, you're going to get liquidated at, I think it says 95% here. You want to pick an amount that's a little bit safer. I would never go above 50%. What that means is if the price of Luna decreases 50%, you'd be getting liquidated for a portion of your Luna in this case. And I wouldn't be running the risk of doing that. So I would keep it personally. I think right now I'm at 45% on this account. I'd keep it even lower than that. I'd honestly collateralize only up to 30-40%. So it's not entirely effective because you're only able to put in or loan against 30% or 40% of your Luna in theory, but it's still pretty good because you're still able to borrow against 40%. So always be careful with your LTV, but what you can do is obviously put in the amount of bLuna you want to borrow against and click proceed and borrow against it here. So just to recap, it's actually really simple and easy to do. You put your Luna for bLuna using your Terra Station wallet. Once you've got bLuna, which is the exact same value as Luna, then you can come in and provide your bLuna on Anchor Protocol under the Borrow tab. Then once you've provided bLuna, that's not doing anything right now. That's just being provided. It's just sitting there. You can borrow against it to earn yield. Not earn yield, to earn UST. So once you've borrowed UST, you'll receive UST in your Terra Station wallet immediately to the corresponding amount that you wish to borrow. So once you borrow against your Luna, you'll receive UST in your wallet. Now, the next step is really simple because what you can do is you can just go across to earn and then click deposit and then deposit that UST that you've just gotten from the borrow tab to earn 20% on your UST. So you take the UST that you've just earned from borrowing and you click deposit, and then you're able to deposit and earn 20% on your UST. That is a pretty good deal in my opinion because we're earning 22% on our Luna. Pretty good. The downsides to this strategy is obviously one, you have the liquidation risk. So if the Luna price crashes, you probably will have to either repay your loan, so top up with more Luna to collateralize more, or you'll have to repay your loan directly with UST. So those are the two options. If your LTV is creeping up, if the Luna price is dropping, you'll have to either pay off some of your loan to get the LTV back down, or you can provide more bLuna to be able to decrease the ratio through that. So they're the options you've got there. It's a little bit risky due to liquidation. It's not super risky because I think Luna's a fairly stable coin that can survive a bear market. But even in a bear market, Luna could see some significant drawdowns. So that brings me to the next strategy, because even though this one is great to be able to borrow UST off your Luna, it's a great strategy. It's not for everyone because not everyone will be comfortable with the liquidation prices. So there is another strategy I've got now using Anchor and Lido Finance, which can help you to earn yield on your Luna, no impermanent loss, and no risk of liquidation. Obviously, there's no impermanent loss on Anchor Protocol either because you're just staking your Luna, but some other farms, for example, on Osmosis and on some of the other farming opportunities in the Luna ecosystem, there'll be impermanent loss with stable pairs and stuff like that. So you want to try and avoid that if you can. Once I said impermanent loss isn't a demon in yield farming, but it's something to be aware of. So that is something we can completely avoid with the next strategy I'll be showing you, and that is on Lido Finance. So this is a brand new strategy now. What you want to do is you want to come over to lido.fi. It's a website where you can get liquidity for staking assets. And it unlocks the key to a super powerful strategy on loop markets with your Luna. So just like Anchor, all you need is Luna to start here. So instead of keeping it in a Binance account, wasting away, we can stake it on Lido to earn over 20% APR, which is a pretty good deal in my opinion. So this is exactly how you do it. You come into Lido, you have your Luna in your Terra Station wallet, you click stake now, you earn 9.2% for just staking your Luna. So that's the first positive. You're already earning 9% just for bonding your Luna for bLuna. So just like we did before on Anchor Protocol, how we bonded Luna for bLuna, we can come in here and we can bond Luna for bLuna on Lido Finance. Why is Lido better than doing it on Anchor? Because you're getting 9% instead of 2%. So it's actually a better rate to bond bLuna on Lido right now. And what you can do is bond Luna for bLuna. Once you've got your bLuna, this unlocks the key to the next strategy on loop markets. Obviously, you only want to bond half of your Luna because what we're going to do in a second is create an LP. We're going to create Luna 50% and bLuna 50%. So you only want to bond 50% of the amount of Luna that you're staking. So take half your Luna, which is bLuna, and then we're going to pair that with the other half of your Luna, which is normal Luna, and then put it together. So bond half of your Luna for bLuna here. And then after you've done that using your Terra Station wallet, we can head over to Loop Markets. Now, Loop Markets is a really unique yield farming protocol in the Terra ecosystem. The first great thing about Loop Markets is that it enables us to stay within the ecosystem. Unlike other strategies like on Osmosis, where you need to bridge out of the eco, Loop allows us to stay with our Terra Station wallets, which makes it a lot easier to be able to execute these strategies with the low gas fees, and there's no bridging cost or bridging time. So staying in the Luna ecosystem on Loop markets allows us to earn some pretty neat APYs. And this is the pool that I'm referring to. I'm actually going to zoom in here so you guys can see a little bit better. It's the bLuna Luna pool. So it's paying 15.52%. Obviously, bLuna is the same price as Luna. So when we're putting bLuna and Luna together, we are essentially single staking Luna. Now, technically, that's not true because you are creating an LP, but in terms of impermanent loss, it's pretty much eradicated because bLuna and Luna are the same price. So there's no impermanent loss using this pool, which is one of the major pluses to this strategy. So as I said, you want to bond half of your Luna for bLuna and then come over to Loop markets. Now that you've got 50% bLuna, 50% Luna, you want to click on pool. Now, what clicking on pool does is enable you to create LP tokens by putting up half your Luna and half your bLuna and providing liquidity. So you want to select Luna, and then you want to select bLuna. You've got both in your Terra Station wallet at this point, and then you can provide liquidity. Make sure the slippage is a little bit lower than this. You can probably do 1 or 2%. Hopefully it works. And you can provide liquidity and create a Luna bLuna pair. Now, once we've got an LP with bLuna and Luna, it's super simple. You just click on farm. So you've got the LP, you click on farm, and then you can just stake the desired amount of LP. Presumably you want to stake all your LP on Loop markets for 15.52%. So 15.52% plus the amount you're getting for bonding Luna, which is 9%, puts the effective APY at around 20%, because obviously you're only bonding half of your Luna. So a 20% APY to stake Luna is a very, very good deal. And this is why something like this is so strong in this market, because you're likely going to be holding Luna anyway in your wallet, right? So if the market's dropping and the market's declining, you want to be able to accumulate more Luna at lower prices. So then when the market pumps, you actually have more Luna. So you're profiting more than if the market was just to pump today. So that's why if the market goes down or consolidates at lower levels, it's actually super valuable, because by implementing strategies like this, you're actually accumulating Luna. You're consistently accumulating Luna through your rewards. And then when the market pumps, you're earning way more because you've just had months of accumulation. It's like forced dollar cost averaging. You don't need to put new capital into the market because these strategies are doing it for you. You're earning yield on your own without having to put in fresh capital, which I think is super powerful for the people that already hold Luna. And if you're not, it's probably a token you should hold anyway. So it is a great strategy here. Now, obviously, the APY is paid out in Loop, which is the governance token of Loop markets. You want to be putting this Loop back into bLuna Luna, which is super easy. You can just go and swap that. You can just swap your Loop rewards back for bLuna and Luna and just follow the process that I just outlined on Lido Finance and then back in Loop markets. That is a really simple way to do it. So you want to compound probably weekly. You could do it daily if you're dealing with a lot of funds, but for most people, I think weekly compounding is probably that sweet spot between maximizing APY and not being too overwhelming. So you need to come in every day. Just compound weekly, back into bLuna Luna. You're stacking Luna. You're stacking during a downtrend. I mean, how good is that? Earning 20% on your Luna in a downtrend in a pretty safe way with no impermanent loss. Obviously, it's not fully safe. You've got smart contract risk, etc. But no impermanent loss and also no liquidation risk like on Anchor makes this strategy pretty good. But I also want to go through another strategy with you guys, because Luna isn't the only token that people hold. You know, I know a lot of you guys will own Phantom, Solana, and other projects that you might hold in your wallet that you also want to stake. So I'm going to show you now an example. It's a similar example to what we did with Luna, but I want to show you that example on the Solana ecosystem, because some of you, and I know a lot of you own Solana, and I like Solana as a project as well. We want to be able to do the exact same thing that we just did with Luna and earn 20% on our Solana this time. So we can do the exact same thing on Lido Finance for Solana. And Solana is one of those very, very good fundamental long-term projects that I think deserves a place in everyone's portfolio. And it's also something that we can leverage off to earn yield. I like holding these kind of big cap L1 projects because they offer some of the most stable yield rates in the market. They don't really fluctuate as much as other projects. So we're able to earn, pretty decent and consistent yield. And they're fairly safe bets compared to the rest of the market, right? And we know they're projects that have great fundamentals. So you're not running the risk of, being exposed to any really dodgy small caps during market volatility, because if the market crashes, something like aSOL is going to hold up a lot better than some of the ecosystem projects, right? So this is how you do it with Solana. You want to come into Lido Finance and click stake. Once you click stake, just like we did with our Luna before, you're earning 5.7% APR for staking your Solana. Now, by staking your Solana, you're receiving ST-SOL, so staked SOL. And you're also earning 5.7% just for staking your Solana. But we can go obviously a step further than this, just like we did with Luna, and stake this Solana on Sunny to be able to earn an insane yield. I'm going to run you through step by step right now how to do that. So we've got our ST-SOL now. Once again, you only want to be doing 50%. Because obviously we're pairing Solana with S or aSOL in this case, which I'll show you how to get in a second. So we want to only be swapping 50% of our Solana for staked SOL. So put 50% into staked SOL for 5.71%. And then we're going to take this and go to Saber. So Saber enables us to swap our staked SOL, and put this into something called aSOL. And aSOL is aggregate Solana stake pool. So it's also worth the same value as Solana. It's pegged to Solana, but it's an aggregator pool. So you're essentially trading Solana here, but they're different wrapped version of the Solana asset. Obviously, there's a small risk that you're taking when you're dealing with these coins in case they lose peg. But I think the mechanisms in place to be able to maintain peg are pretty strong in this case. So it's not something I'm personally worried about, but obviously do your own research on that. So once you've got half of your Solana in staked SOL, you come to Saber, and then you want to swap that staked SOL for aSOL. Swap all of it for aSOL. So we're essentially going to have SOL, which you already have in your wallet, and then you'll have 50% in aSOL, which you've just swapped through staked SOL. So once you've got aSOL, you can pair aSOL and SOL together in an LP. And this LP is actually paying much better rates than the staked SOL LP, and that's why we're doing this swap right now. So once you swap for aSOL, navigate to pools. It's the pools section of Saber, and under pools, we can scroll down to this aSOL SOL pool here. It's got $3.5 million locked in the pool, so a little bit of liquidity in there, and we can press deposit here, and we can deposit our aSOL and our SOL together for an LP. So put in your aSOL, put in your 50% SOL, which you've already got in your wallet, and you can create an LP of aSOL combined with SOL to be able to stake. Now, you'll need a Phantom wallet for this. Phantom is my favorite, not Phantom in terms of the project, Phantom in terms of PHANT. That wallet is the main wallet on Solana, which is compatible with this. There's other wallets as well, but Phantom is the one that I recommend. So you'll need a Solana wallet, obviously, to be able to do this. So if you've got Solana sitting in your Binance or your KUCOIN, you need to take that Solana and transfer that across to your Phantom wallet. Once again, that isn't Phantom the coin, it's Phantom with a PH, which is the wallet for Solana. Now, with your Phantom wallet, you can come in and you can create your SOL aSOL LP. So you're creating LP tokens with your Solana to be able to stake. Once you've got these tokens, you come into Sunny Aggregator, another protocol we've talked about a fair bit on the show, which provides some really good yield on your Solana assets to be able to earn yield on this LP that we've just created. So at this point, you've got aSOL SOL as a pair, and you can come in and scroll down to this Saber aSOL SOL LP. So you need to create the LP on Saber. And once you've done that, Sunny is paying 13% APY on your aSOL SOL. You'll be paid in Saber and Sunny tokens. So you're earning two sets of tokens for executing this strategy. And once again, there's no impermanent loss because you're pairing SOL with another asset which is pegged to the value of SOL. So you're pairing SOL and SOL, no impermanent loss, and you're earning yield in Saber and Sunny. Now, obviously, just like we did with Luna, you can compound these rewards weekly on Saber. You can take your Saber and your Sunny, you can come into swap, and you can use these rewards to be able to swap back into SOL. And you can just repeat the process on Lido that I just showed you and create your LPs on Saber once a week, come back into Sunny and stake these LPs back for 13% APY. Just as the Luna strategy goes, you're not just earning this 13% that's showing on the screen here. You're actually earning more than that, because you are also earning the additional 5.7% that you're making from staking half of your Solana in the first place. So the effective APY for this strategy is closer to 17% once you factor in half of your assets being staked for 5.7%. So 17% on Saber, on aSOL Sol, on Sunny is another great way to stake your Solana. And I think it is one of the best ways to stake your Solana at the moment. Almost 20% on Sol and almost 20% on Luna through Lido Finance is a really good deal. So I've just shown you two of my favorite strategies to be able to combat yield in this market. I mean, you're earning 20% on Solana. You're earning 20% on Luna, like very, very strong yields whilst the market is declining. So you're able to continue to DCA and accumulate these tokens without having to put fresh capital in. And that's what's so important about yield farming, that we can take the pressure off putting fresh cash into the market constantly, because we're able to still accumulate tokens. Now, obviously, if you combine these yield farming strategies with your regular depositing strategy from outside crypto, then it's a double whammy, because you're getting the DCA entries on these projects when the market dips. So say you're buying Sol and Luna when the market significantly dips, and then you're farming it to be able to accumulate more Sol and Luna whilst the market is dipping. So that is why I really always say that yield farming is the best way to play this market right now, because it's a really uncertain market, guys. Like, look at what's happened. We're getting some crazy swings and we're getting some big opportunities, but at the same time, we have to be careful. You know, we can't be too reckless out there with trying to catch these falling knives. We have to be pragmatic. And one way to be extremely pragmatic in crypto right now is via yield farming. And I hope I was able to help you guys out with where to put your Luna and where to put your Sol at the moment to take advantage. Now, tomorrow, on tomorrow's show at 1:30 a.m. EST, I'll be showing you how to farm stable coins to earn yield. So not only can we earn yield on Solana and on Luna and Phantom, we can also earn yield on stable coins. So you can exacerbate the amount of profit that you're making, so you can take advantage of these dips. So you want to be farming your stables, guys, as well as farming your tokens, to be able to get that double whammy effect that I always talk about, of being able to increase your stablecoin holdings and also therefore increasing your buying power to be able to take advantage of dips. So tomorrow's show, exact same time, 1:30 a.m. EST, I'll be running you through some really cool stablecoin farming strategies, which are super relevant right now. But these strategies are also ones not to sleep on for 20% on your Luna and Solana. Tomorrow is going to be a big show, so make sure you tune in every day. You can't afford to be missing these shows, guys. Like, I am seriously dropping alpha for you guys every day to be able to help you earn yield and profit in this crazy market. And so I hope you guys are tuning in every single day to take advantage. You know, I'm here as a resource to be able to help you guys on your crypto journey, to be able to profit during these crazy times. You know, that is what I am here to do every single day. So I hope that you guys can implement some of these strategies into your own portfolios. Thank you very much for watching the video. Make sure you smash the like button if you enjoyed these strategies today. I will catch you tomorrow. See you later. Peace out.